Ladies and gentlemen, the Korean stock market has crashed to a level where it triggered a circuit breaker, and gold, silver, and Bitcoin has continued to crash. And basically, this might be a prelude to something worse that's coming. So watch on till the end if I give my analysis to whether all this will result in a disaster. Essentially, we are asking whether a bloodbath is coming, especially to the US stock market. And let's watch on. So a quick snapshot. The Bitcoin has went down to 77,000. Take note, it hit the all-time high of 126,000 or so. And just over the last 5 days, it has went down by 13%. Today, continue to go down. And gold prices continue to slide by 3.5%, and silver about the same magnitude. Not as bad as what we saw on Friday, but this is still bad. So, and I think this is something that we need to see whether will spill over to the mainstream stock market. Gold price on the CFD side has really went down. You can see it hit a high of around here and it came down all the way down. It rebounded a little bit, but it's still a phenomenal downward swing from what we have seen before. So is this gold price crash just a structural breakdown or a sharp correction? We don't know, because underlying gold is something that we cannot value. There's no discounted cash flow model we can adopt and see whether gold produces a stream of income and then we can discount it. So we don't really know how to value gold, but certainly gold has come down phenomenally. So the US dollar has strengthened, okay, quite significantly over the last 2 days. It's recovered back to 1.27. It's a healthy strengthening of the US dollar. I hope that you will stay somewhere there. I don't want to go down, I don't want to go up. I just want to stay where it is. I think that'll be very healthy. The ringgit, surprisingly, held on quite strongly against the Sing dollar. It's still held on at 3.1 ringgit to 1 Sing dollar. And I think this is really a show of sign of confidence in the Malaysian economy. The S&P fund right now doesn't look very good. There is a slight downturn in the futures market. I think today it might break 6,800 points or so. It's a pity. It just touched 7,000 and just went straight all the way down. But however, I think we've probably not seen the worst of the volatility yet. So I think we already discussed why gold is falling down. Mainly is because Calvin Walsh is now nominated as the Federal Reserve Chairman, and he's known to be a hawkish Federal Reserve Committee member that wants to make sure that that the interest rate is used pretty strongly against inflation. And this will give rise to a strong US dollar if the interest rate of US could be held at where it is. But of course, we always said that this seems to go against what Donald Trump wants. So I'm surprised that he appointed someone that is hawkish in nature. Right now, there's also margin calls on gold contracts. So these margin calls cause the gold unwinding. And as a result, in the futures market, there's accelerated selling. There's now opportunity cost of holding non-yielding asset like gold. There's a lot of people who are gold fanatics that argue with me that gold is a productive asset because you can use gold or silver in industrial use whatsoever. Yes, but that's not the definition of a productive investment. Okay, a productive asset and a productive a commodity is two different things. A productive investment or asset is something that gives you a future cash flow. It generates cash flow. Gold itself doesn't generate cash flow. Okay, you can use it to make other things and sell, and that's fine. But that, by definition, is not called investment. So I think a lot of people need to get their definition clear. You can see that when you are very emotional about something, you're not suitable to be a good investor. I think everybody got to get that very clear in your mind. Now, silver is even worse. The amplification of the volatility is far higher than gold, which surprised me. So silver has dropped phenomenally, and I think it's almost hitting 50% or so at one point in time. So we got to see whether people are genuinely, just speculating on gold and silver. I think we got to be careful when you don't have a long-term strategy in holding on an asset. I would say that I don't know about silver at all. I think gold in the long term is a good inflation hedge. That means you should not expect a return that is very high, much higher than inflation in the long run. In the short run, there's going to be volatility like what we have seen, but in the long run, it has always proven in thousands of years to be a good inflation hedge, and that should be top of our mind when we hold gold. Now let's have a quick word on Bitcoin. Now, Bitcoin has always been viewed as a digital gold, not this time. It is not an alternative to gold at all. So the decline has been pretty severe. I know a lot of players in the Bitcoin world that is now being hit very badly because most of them would hold leverage positions in Bitcoin. So Bitcoin has come down to 77,000. Will it go down to 60,000? I don't know. Will it go down to 40,000? I don't know. Will it bounce back to 100,000? I don't know. But that's largely because Bitcoin has no underlying return on the investment. So again, it's the greatest fool theory. You got to find a greater fool than yourself to hold this asset, and that unfortunately is something that we cannot compute. So my best advice to most people is don't touch. So let's talk about Korea. Korea stock market has crashed. It went down about 5.26% or so, and it hit a circuit breaker to get people to cool off. And hitting circuit breakers are very serious in stock market. So we don't know whether this is a prelude to what we will see in other markets, especially US one. I doubt so, because I think the correlation between US market and Asian market is not very high unless it's a big market. But however, this is quite a serious matter. Now, it's basically a phenomena where people are now unwinding a lot of the gold and silver positions, or their margin calls, so they have to sell other assets to top it up. So all this cause the whole stock market to go down. Could this happen to US? I mean, it's possible. Um, Hard to say right now, but I think it's possible. So in short, is this a prelude to a global equity crash? The short answer is probably not yet. Okay, it's hard to say with certainty. The current position I look at the futures market is that the futures market is now down, but it's not severely down. We don't have a sign of a massive sell-off yet. So the volatility is high, but it's not out of the world kind of volatility. So I don't think we see panic yet, but clearly the risk appetite has fallen. A lot of people are now driving towards more a fearful position. So here I want to talk about, does gold crashes cause stock market crashes? Well, the honest answer after looking at history is it depends. It depends entirely on the reason why gold prices are falling. So it is a signal and not a trigger, and I'll give you a few lessons from history. So if scenario one, if the gold prices fall because yields and US dollars strengthen, okay, then that usually don't lead to a market stock market crash. So in 2013, there was a major gold price crash, but the US stock market held on strong. 2011, 2015, there was major gold bear market, but the stock recovered pretty strongly. So if treasury yields goes up and the US dollar goes up, it's not necessary that the stock market will crash. So now the second scenario, if the gold price fall is because of forced deleveraging, meaning that there is an increase in margin calls, and as a result, there is not enough liquidity in the market for traders and investors. They will quickly sell whatever asset they have. As a result, the crash in the gold market will lead to a sale, okay, in the stock market as well. Those kind of situation, it will lead to a stock market crash. Now we have seen that in major stock market collapse like 2020 and so on. So this kind of widespread market panic is probably what we don't see it right now in the market, but there are early signs of it because that's exactly what happened in Korea right now. So scenario three, where gold prices go down, would be a case where the world become a better, more peaceful place and better world to live in. This is when countries shake hand and come to a peace agreement, no more wars. Donald Trump become an angel and stop driving people insane. And as a result, the world become more predictable and things like that. Now, these are situations where gold will start to lose its shine, and then the world just suddenly become a better place. Can this happen? Yes, it can happen. But when this kind of thing happen, it does not lead to a stock market fall. In fact, most of this time it lead to a stock market increase. So, in a nutshell, let's take a look at where we are and let's talk about chances. Okay, so is this a case where the US dollar now repricing higher? Yes, I think so. And if that's so, then it doesn't necessarily lead to a stock market crash. Now, is this also a case where there is some kind of partial liquidation because people have to clear their positions in the stock market to fund the losses in the gold and silver market? Yes, I think there's a bit of that. So the risk of that is moderate, not high, but moderate. And what about a case where the world become a better place? I don't think so. The world is still a very not a peaceful place. War is still going on. Donald Trump is still as volatile as he is. So I don't think it's the case. So I think it's a scenario of case one and two. So I think the risk has gone up somewhat, but not out of the world yet. So what do we do right now? Well, I cannot tell you what you should do, but I'll tell you what I'm actively doing. I'm actively preparing for a stock market crash. And this is a time where I think the situation right now in the geopolitical stock market investment world, it's getting just volatile and high risk. So I'm taking a position to get ready. I'm actively preparing for a crash. I don't know when it'll come. I don't know whether it will come tomorrow, 1 month, 6 months, 9 months. I don't know, but I know that the chances of a crash has elevated. Let me repeat again. This is not a reason for us to sell. Okay, I don't believe in selling. I believe in holding on the market. I believe in this concept called tahanability. I've taught everybody in detail on how to prepare for a crash. In my live stream, I have 10 lessons on crash buying, and I've taught everybody everything I know about it. Those people who learn, this is the time to activate the skills that I've taught you. For those people who did not pick up the live stream, I've always told you to always follow my live stream. And those lessons, unfortunately, I can't kept it because of sensitivity. So for those who have picked up the skills already, time to deploy those skills right now. And I think for those who are adopting a preparation phase right now for a crash, I think that you will do very well when a crash comes. Okay. So my take is right now we prepare. We don't need to predict. Okay. And when the market comes, we are both financially ready and emotionally ready for it. Okay. So happy to hear what your thoughts are. And for those people who haven't subscribed to my YouTube channel and my 1865 channel, please subscribe to it. Hit subscribe. So you're watching my YouTube channel right now. I will go live whenever there is a market abnormally. I'm trying to use the right word. And for those people who are on the 65 channel, I will also keep everybody informed real time. And all my materials, like my PDF documents, I post it up on my Telegram channel so as to let everybody take a chapter from there. Okay. Please scan the QR code to go to my 1865 Telegram channel and hit subscribe and follow me very closely in my live stream as the world becomes more chaotic right now in the financial world. Thank you for watching, and I'll see you in my live stream.